please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're watching Business Lunch. I'm Nisha Podar, and with me, as always, is Sonia Shenoy. Sonia, good afternoon. What a very, very weak beginning to this particular, week as far as the markets are concerned. It's red all around. If you look at the contribution, it's showing a lot of weakness for the rest of the day as well. Nifty 50, Sensex, all of them down more than 1% each. Bank Nifty also down, and mid caps are taking a deeper cut, more than 1.5% down now.
Oh, absolutely. I think it's an extension of what happened on Friday, right? We saw a lot of heavyweights put pressure on the markets, and now we're seeing that in trade as well. Look at the likes of SBI, you have L&T, all these constituents dragged the markets low on Friday as well, ICICI Bank, etc. In fact, we have a couple of guests joining in. Anuj is also here with us. Anuj, it's a weak day for the markets, no two ways about that. But after breaching the lows that we saw, the Friday low of the market, it seems like it's heading lower.
Yeah, as we discussed in the morning as well, Sonia, the crucial thing to do was to respect Friday's low.
Yeah.
And if Friday's low had gone, I mean, if you had to have a short covering, the best hope for this market was short covering. And for that to happen, Friday's low should have been held. If that was not held, it was clear that more supply would come in. And that's what you're seeing right now. And what's important right now is that the selling is now indiscriminate in nature. It's, of course, it started with PSU banks. And by the way, PNB is now exact half of that high it made after the recapitalization. And it's lower than the level from where it started rally. Most of the PSU banks, save for SBI, are now below the level from where that recap rally actually started. I think that point should not be forgotten, which is also a bigger lesson in terms of, how the market has approached some of these stocks. But, look at some of the other stocks. We've been talking ad nauseum about Maruti, for example, for last many days now. The selling pressure in Maruti, selling pressure in Larsen and Toubro. I mean, they have got nothing to do with the PNB fraud, right? Yeah. So obviously this, there's a lot of FI selling which is quite clearly visible. Even on Friday, you had 1,000 crores of FI selling. You had more than that in terms of DII buying, and still the market went down. That happens when you have this kind of basket selling. So right now, you should not make any mistake about the fact that this is a market which is now having the first correction of this bull market. And 2018 is going to be a different year than 2017. 2017, you bought every dip, you made money. 2018 is not likely to be that easy. And what's also going to be interesting is that a lot of money which has come in via mutual fund route is now seeing the first correction, because we've been talking about it. What happens when the first correction? Now is the first correction. Now would be the test of that money which has been supporting our market. But today is really
the new money, as we call it, right?
And just one point. This is expiry week. Expiry week is about trend. Right now the trend is with the shorts, and they don't have. This market will recover when you give shorts a fear of God in terms of covering their positions right now. Right now, there's no reason. And, last week, for example, we went through a week in which the US market were up 6%. MSA emerging market, though most of the markets were closed for last week, that index was up 5-6% and we were down. So obviously, this is local in nature. The best of the global cues haven't helped you. So right now, there's a bit of a kitchen sinking going on. 10,080 thereabout is the 200-day moving average. Not saying that you go there in one straight line, but in the past, bull market corrections do test the 200-day moving average. This market can go to 9,800, 9,900 and still be in a bull market. We should not forget that, because
it's not even a 10% correction. If you look at it from the highs of 11,100, it's barely what 8-9% now.
Exactly. So if your belief is that this is a bull market correction, in that case, good quality stocks should be accumulated, because obviously you can't catch the bottom. No one can. So, but for now, the screen is looking a bit ugly.
Okay. In fact, Ajay Srivastava of Dimensions Consulting is also with us. Ajay, we've started to underperform most of the global markets, but give and take everything, it's not even a 10% correction that this market has seen. You think it's no time to panic and this is just a routine correction in a bull market, or would you start getting worried about the trend changing?
Well, Sonia, unfortunately, we are worried a lot before this, because, 10% is an optical illusion for most investors, because the portfolio is not built up on index. The portfolio is built up of mid caps, large caps, and mostly mid caps, maybe some middle tier companies. And those have seen much steeper cuts than 10%. So if you look at the portfolio composition, you would find that a decline has been not less than 20% in most portfolios in the last month and a half or so. Having said that, I think one of the reasons is the market truly underappreciated the repercussions of the PNB problem. It is now getting endemic. It is spreading to the banking sector. All the banks at this point of time, we know RBI and bank chairmen have asked them to review every single transaction with the jewelry trade, with the diamond trade, and all the LOUs are being put under scrutiny, full documentation. They are not going to give you any fresh money till this whole saga is over. So let's understand that this is not a banking problem. This is an economic problem now getting into a serious nature. Remember the credit crisis? This is akin to credit crisis for mid-cap and small caps because they have nowhere to go but PSU banks. Private banks largely unaffected, but it is now becoming from a banking to an economic problem. The stock market knows it, the FIs knows it, that this doesn't end here. And if it spirals more out of control, then where do you take the depositors of the nationalized banks? They will like to move the money to bigger of the private banks. They like to move money around. And then you have a different debt spiral. So I think the response has been, to my mind, just not being serious enough that, listen, how do you quarantine this problem out of an economic arena? It's now spreading, and it's spreading wildly.
Ajay, good afternoon. So,
good afternoon, Anuj.
You know, the issue here is that, you know, as they say in equity markets, you know, be fearful when others are greedy and be greedy when others are fearful. You think we've reached that stage yet in terms of looking to buy some good quality stocks now, or do you want to stay clear for now?
See, if you look at good quality stocks, let me be honest, let's name, I'm not saying these are my portfolio choices, but I happen to have them, not recommending them. They have not fallen very much. If you look at a mid-cap gaming company, Delta Corp, didn't fall very much. It fell, it recovered pretty fast. If you look at a Bharat Forge, it's not gone down as badly as others. If you look at HDFC Bank, it's about holding steady 1800 and so on and so forth. So I think good quality stocks never tend to go down with a large measure, but that's not what the portfolios are made of. The issue is different today. It doesn't matter you're good or a bad quality. At this point in time, Anuj, is the economic situation starts to get, banking crisis starts to get into economic situation in credit delivery, which was the hallmark of the bank recapitalization, was the credit delivery will get streamlined and start to move in. If the credit delivery starts to get hampered, which it has already in a dramatic fashion, your export industry, your industry which are deriving their benefits from the export market, including domestic markets, they will take a real big beating in the market. So let's understand, when credit delivery stops, it doesn't matter you're a good or a bad stock, you will go down. We are in a situation where we're looking at a credit delivery problem in the system, not necessarily local selling, banking, or any other reason.
So what is your advice to retail investors at the moment? Because even some of these companies that are not that linked or not that affected by the credit crisis are also seeing a cut. You know, for example, say a Maruti or an Eicher Motors, they've all fallen about 10-15% this month already. Has the time come to buy, or do you think it's better to just wait a bit before making that choice?
See, you know, people like Maruti, Sonia, and Eicher, unfortunately, were so over-owned at every point of time in the last 2 years that there was no way for them that even a slightest correction in their operating performance, which you saw Maruti's margin went down, was a straight move to say, now let's compare our exposures to the system. It's so over-owned that I don't know in which portfolio it doesn't exist. So if you want to add on an average pricing, well, that's another connotation. But I doubt that there are new investors in the market who don't own these two stocks, or maybe most of the marquee stocks. You know, we are going into a correction almost fully invested. I think that's the issue here. I don't think there is too much surplus money lying here to be invested because there is a steep correction, and that is why we are not seeing demand coming.
Okay, take that point completely, Ajay. Thanks a lot for your time today. Just want to point out, of course, the entire market is down, but you know, for example, a Vakrangi that was at upper circuit is now actually on the lower circuit, and normally you see, you know, that move also playing out on PC Jewelers when that happens. So there's a 10% intraday reversal that you're seeing on Vakrangi. I would want to see the intraday of PC Jeweler as well. Okay, that has also started to go down. So it happens. But Ashwini Gujral is also with us. Ashwini, you spoke about the probability of brutal, last 2 hours. But right now, would you recommend covering some shorts?
I guess brutality started right in the morning. But, earlier people were buying that, value buyers are coming in. Now buyers are moving to the sidelines. And even a small, sell order can create, a large impact cost. So my sense is that 10,150, 10,200, which is the 200-day moving average broadly, we are headed there. And on these PSU banks, a lot of them will become double digit. We've seen, in 2003, 2004, these guys used to be 40, 50 rupees, all of them. I think that's where they will go. And it's now, as we heard, it's becoming an economy-wide issue. And plus, there are large players who are selling because the big stocks, Maruti, HDFC Bank, these are not getting sold by retailers. So right now, the way to play this market is to wait for the fall to settle. See, I don't believe in catching bottoms. If you are an investor, you are better off buying 5% higher. But you don't know if you buy today, how much lower we can go. Because till say 95 to 9700, which is the 50% zone of the entire upside, till that time, the bull market will sustain. And but 500-700 points, the stock prices will look very different. So right now the market is gaining momentum. You know, all the excesses which got built up over the last 1 year, they will need to get cleaned out. The mutual fund investors will also take a hit. They will also know, what the fear of God is.
All right, Ashwini, thanks so much for joining us.
Let's talk about the big stock of the moment. Tata Steel is under quite a bit of pressure. In an exclusive, Tata Steel management confirms bidding for Bhushan Steel. Remember, it's an extremely aggressive bid, and that's why the stock is under pressure on balance sheet concerns. Speaking to CNBC TV 18's Anshu Sharma, the MD of Tata Steel says Bhushan Steel assets will be good for the company's presence in eastern India. Take a look.
You're the front runner for both Bhushan Steel and Power. Do you see any equity infusion that you can do in this Bhushan Steel, and is it the right time to expand your capacity?
No, firstly, we have to be formally informed. I mean, we've only heard from the media. We'll wait to hear from the IRP and the bankers, and then we will talk to the press.
What made Tata Steel offer more than earlier? It is quite 40% above the first bid that you had put in for Bhushan Steel.
I don't think there's any first bid and later bid. I think the media talked of multiple numbers. So I don't want to comment on the specific numbers, but we'll wait to hear from the IRP and then we will comment. But yes, these assets we have been interested right from the beginning because they're in the eastern region, and we believe that there's a lot of synergy we can get out of these assets. And
will the payment be upfront or staggered in how many years?
I won't comment on that. We've submitted our bid. There are many details in the bid. I wouldn't like to comment on that till we have a formal discussion with the IRP.
By when do you expect formalization?
I don't know. I think we were told that we may hear something this week, so we'll wait for that.
Straight to a big corporate voice then on the show. Now remember, Renew Power is really gearing up for one of the largest IPOs that India has seen in the renewable energy space, and that is expected after a large deal as well. So we caught up with Sumant Sinha, the founder of Renew Power, on the sidelines of Magnetic Maharashtra. Take a look.
Well, right now we have about 400 megawatts of wind in the state, which is a total investment of close to 3,000 crores. So we're actually already probably the largest renewable energy investor in the state of Maharashtra. And it's a fairly sizable investment that we have here. Going forward, we are going to be signing an MOU today with the government of Maharashtra for further investments of about 2,500 megawatts in the state over the next 5 years. And I think that is going to be a function of also the policies that Maharashtra is talking about coming out with in the renewable energy space, which we're very excited about.
Talking specifically about Renew now, your IPO plans have been in the media for some time. It was reported that it should happen within the next 12 months and you could be looking at a $600 million fundraising. Would you like to offer any comments on that?
No, unfortunately I can't comment about IPO plans.
Okay, fair enough. So speaking about investments in Renew, I think CPPIB has now stepped in and taken over ADB's stake. What comments do you have on that?
No, I think, look, ADB was a very good investor for us for many years. I think CPPIB is an equally high-quality investor. They are also a long-term investor. And so we're very enthused to have a large investor like CPPIB, who's invested in Indian infrastructure before and globally as well, as part of our overall shareholder base.
You've been on a sort of acquisition spree. You've been picking up renewable portfolios of multinational companies all over the country. Can we expect that trend to continue into 2018, or is that something now that's in the past?
You know, we look at all opportunities for expansion, whether organic or inorganic, at all points in time. And certainly, we would also be looking at inorganic opportunities. So if there's something that is interesting, that makes sense, we would certainly look to proceed.